Good morning, guys. Welcome back to Leading Crypto. I did want to go ahead and introduce you guys back to Kenneth. Right off the bat here, Kenneth has been on before. He's got over 20 years of investing experience. We were just talking about that behind stage, talking about his first stock that he ever bought. It was WWE. And so the point I'm going to make there is all it takes is 1 foot into the ether, so to speak, and to get started. It can be something that you like to watch, like WWE. And that actually probably performed really well for you over time. So today we're going to focus on what Kenneth is doing to prepare for 2023. As you guys know, his whole career is investing. It's what he does for a living. So it's always great to bring him on because I have maybe 5 years experience in the space and Kenneth has 20. And so you just don't get that experience until you gain that experience over time. So I'll just kind of start off the rip, guys. All his information is down below. Please go follow Kenneth on YouTube. He's also got a really informative and entertaining TikTok, in my opinion. He puts out some good clips. They're funny. But a really good playlist of information to get you guys started. So, Kenneth, going into 2023, everyone sits down with themselves. I know I do, and says, okay, in 2023, this is what I want to do. 2022, this is what I was able to accomplish. What's that look like for you?
2023 is going to be interesting because we've already come off of seeing the Dow drop or the S&P 500 market drop like 20%. And the thought is like now we're heading into a recession. Now things are going to be getting much worse. And could be that we're turning a corner. It's one of those things where you've got half the people thinking it's going to get way worse. The other half of the people saying it's going to get better. Some people are saying it's just going to be very quiet and slow for the next couple of years. There's not going to be a lot of ups or downs. The thing that I'm doing is already looking at if we are heading into a recession, what are people going to be cutting back on? So those are the investments I might not want to be buying. And what are people going to be doing more of? Like they're going to be shopping at more affordable places like Dollar General, Five Below. They're going to be looking for deals, buying in bulk like at Costco and stuff like that. So that's kind of how I switch my focus. Like maybe I'll buy less Amazon stock this year because they could get hurt a little bit. I see someone saying it's difficult to hear me.
Yeah, no, perfect. Audio's a little low from Lola and Pullman. We kind of addressed this backstage a little bit. We're doing the best we can with there. I think it's a proximity thing with this computer mic, but not a big deal. We were going to work through it. So you're saying potentially buying more value stocks like Dollar General, Costco. I know that I actually priced out a Costco membership because I have to drive 30 minutes to really go anywhere. And so to me, it's like maybe I just go to Costco. So that's actually a great point. In terms of tech, so you were just talking about Amazon. So when you say, one thing I have noticed, and you brought up a couple really good points I'm going to touch on. You brought up how the Dow is finally turning the corner, potentially kind of, I wouldn't say it's like rolling over, but it's finally, there's this discrepancy between it and the rest of the indices. It seems like it's performing very well. And, you don't have that, you have that divergence on the other ones. How do you see that? Do you think that's just because, industrials are going to perform better than tech, you think, going forward? And so that might be a safer place to invest as far as, if there is more drawdown, it might not be as bad. Or
yeah, at least in the near term, industrials will definitely perform better or than like retail stuff, luxury goods. If there is a recession, people are probably going to be driving less, so less gas. Especially if they're getting laid off. Amazon just laid off 18,000 people. Microsoft is laying off 10,000 more people. So we're seeing some layoffs too. So tech has already gotten hit pretty hard, and these layoffs could be the end, like the final step of the final step of the sell-off, and we could be turning a corner. But yeah, I think just at least in the near term, tech and more volatile, high-risk stuff, speculative stocks, growth stocks could continue to be a little slower.
Did you buy the Tesla dip?
No, I didn't.
That's all I need to know. Yeah, no. No, that's a good strategy. Do you get into commodities at all? I have never asked you about gold and silver, but are you into that sector at all? I mean, I know you're all about being diversified.
Yeah, I own a little gold. There was a time when I was buying more of like gold mining stocks. I don't own much gold. I don't own any silver. I'm seeing some of the.
Yep. Let's see here. We'll highlight this one. So this is from Matt. He wants to know your opinion on like 2x leverage SPX or ETFs like SPUU.
I don't know much about that particular ticker symbol, but I'm going to write it down. I can make a video on my TikTok later. But leveraged ETFs can be a little bit more volatile, which means that you can make a little bit more money, but you can also lose a lot more money.
I was gonna say there's always that risk reward, isn't there?
Yeah. Also, if you're going to get into these things, they might be something that you'd want to hold more short term than long term.
And a really good question, because Matt's like 21 or 22. He's young. He's still in college, if I recall. And so he's asking kind of like allocation wise. Oh, he's going into the short SPX ETF. Okay. I'll let you kind of field that one.
A young person, I personally don't think someone should be going heavy into a short ETF. You know, you're young, you should be building a position now. I mean, it would be okay if you like a short term wanted to trade something very short term, a short, like, you know, for example, if you saw that Tesla was going to have a really slow quarter, or they were going to underperform on their sales or something, you might want to do a quick trade that was a short. When you're young, like the real goal for me would be to be acquiring as many shares as possible in like an index fund, a dividend paying fund. They're boring, but you have, you know, I just did a video on my YouTube video about the YouTube channel about the difference that 10 years makes when it comes to investing. And if you're in your 20s and you're putting $250 a month into an index fund, by the time you're in your 50s or 60s, it'll be in the millions. You'd have to put in like hundreds and hundreds of dollars to get that at my age, right? Like I'm 37. You'd be having to put like $400 a month, $500 a month to get that same 1.4 million in retirement. I'm optimistic, right? So like I invest for the long term. I want to hold, I buy stuff because I think it's going to go up in the future. So I don't get why a younger person would be wanting to buy something that was a short position, unless it was a short term thing that they thought like, I think markets are going to go down in the next couple of weeks or months.
I mean, you're basically rooting against the economy to have a permanent recession at that point. So I totally understand that. And I like the point that you made, because you touched on this last time you were here. You were talking about if, you know, you're young, that's the best time to build a position, because everything kind of does go up and to the right, whether it's land, whether it's stocks, because we do live in just the fundamental, you know, aspect of America's economy is actually inflationary. Like they require some level of inflation just to operate, you know, and if we have deflation, it's bad. So building positions at a young age is a good idea. And this is kind of this is a question that I'm not trying to trigger you, but what's the latest you would say a person could get into investing to like comfortably retire and not have to overstress themselves financially? Is there like a cutoff where you're like, hey, if you haven't done this by the time you're 30, you know, you need to do it right now. Don't wait till you're 31. Start today.
I would say, I mean, you know, the thing is, the more time you have, the better. So, or the less time you have, the more screwed you are. If you're starting in your late 40s, you know, you're pretty much screwed. You know, I mean, you would have to invest so much because you have a limited time. You know, if you're, I mean, or you just retire later, right? Like instead of retiring at 60, you retire when you're 70, and then you get your time back. But like when you're 70, it's pretty much, you know, are you going to be able to go on a walking tour of Europe when you're in your 70s and your hips hurt and your back hurt and your knees are shot? Like, no. So you might have the money, but you won't have the ability to really enjoy it at that point. So the earlier the better. Like I just posted this, everything I say is going to be like, I just posted a video. But I just posted a video the other day. I was talking to my friend, and he wanted me to talk to his mom, who was like late 60s and has like $500 to her name, never bought a stock, never bought an investment. And she just bought a house, like for the first time ever in her late 60s. And she's like, how do I start investing? I want to retire. And I was like, you're done. It's not going to happen. Like,
did you just kind of quote Superbad and just say, enjoy your remaining years? Not to be too morbid, but like, I mean, at that point, it's what you're doing. You're just going to be getting by with your, you know, what income you have coming in, and that's it.
Yeah. Well, like we were talking, and she said, well, I bought a house, and she was so happy. Like, isn't that a great investment? And I was like, it's a great investment if you're 20 or 30, but when you're 67 and you're buying a house and you're getting a mortgage, like your mortgage and your utilities and your insurance is more than you were paying in rent. Like you're gonna you're going to die before you pay. It's a 30-year mortgage. I told her, I was like, you're going to be dead before you pay off your mortgage. Like, that's not ideal.
Now, I know that as far as I know, you don't own a home, correct?
I do.
Oh, you do?
Yeah, I own
Okay.
my home.
I thought for some reason you rented. I don't know why. I was going to ask if there was a strategy behind that because of like maybe bills that cost for upkeep or whatever it may be. But the next question I would have, I guess, is what is your opinion? Because we were just talking about housing, and I only ask this because, you know, I own properties and I'm curious on your thoughts. Everyone says don't pay off your home early because, you know, you can make more money investing. Do you buy into that, or do you think you should pay the debt off as soon as possible?
I guess it depends on the interest rate and how much it is and what you're.
That's fair. I mean, the average interest rate right now, let's say, is 5%, which is actually lower than it is. But let's say it's a 5% rate, which I guess back in the day was really competitive, you know, by most standards. Is 5% something that you would consider? Because to me, that's high because I'm under 3% after refinancing. So, like, to me, I'm like, it makes no sense to get rid of my mortgage. But if I had a 5% rate, would it make sense to pay that down faster? Or do you think it would be better to invest in when, you know, the market might be giving opportunities like it is here lately?
I would prefer to invest right now just because I see the opportunities in a lot of stocks that have just gotten absolutely obliterated, and they're good stocks. I'm not talking about like high risk speculative
Bed Bath and Beyond.
Yeah, no Bed Bath and Beyond, no nothing like that. But like good quality stuff, yeah, it's an opportunity, and it doesn't have to be all or nothing. Like you can go half and half. You can invest a little bit. You don't have to switch from trying to pay off the whole thing entirely.
Fair.
You know,
we do have another question here from Pullman. He's wondering if you favor swing trading stocks versus looking for value to let them grow, or do you do a mix of it?
I do a mix.
Yeah, I know you do some trading.
Yeah, I've been trading for the last 13 years, and it's mostly been swing trades, except for in the last like from when Trump got elected. So I use like presidents as like markers for stuff. From when Trump got elected to within the last year, I've been mostly day trading just because the market volatility it's nuts, and the global stuff, like news can come out one day that just rocks markets. So I don't really want to be in like a 3-week swing trade. So I would prefer in more volatile times. I'm at least comfortable with day trading. I don't want to get caught up in like a headline that drops my stock 20% overnight or whatever. I'm sorry.
It's all good, Billy. Yeah, we're working on it. My question to you is, he was touching about value, and I know you do like to invest, and you obviously have strategies for that and like plans. In 2023, obviously everyone's talking about a downturn in the market, and our opinions are only opinions. Like, you know, it affects the market zero. Let's say that the market is going to take that downturn. You know, are you still kind of waiting to see what's going to happen with a lot of your capital to see if you want to invest lower? How are you finding those targets if you are going to be, I guess, looking for them? Are you using like basic technical analysis tools? Or are you kind of waiting till sentiment shifts? Like, what's a big factor for you?
I'll use technical analysis when I've made a decision about a stock I want to buy, whether it's a trade or an investment, because I want to get the best price that I can. So if I like want to go in on a stock and I like a long-term investment, it really doesn't matter when I buy it because I'm holding it for the next like 10 to 20 or 30 years. But in the moment, I do want the best price I can. So if I look at the stock and it's extremely it's had a huge run and it's overbought on the relative strength index, like I'll wait for a pullback to get like a better price. I also pay attention more to like the economic news right now. Like these big layoffs that are coming from tech companies don't really bother me too much. But if we start seeing them like outside of tech in like retail spaces, people getting massive layoffs, then I'll start to be more concerned. So I am really sitting right now on a lot of cash. I am occasionally buying stuff. Sorry?
Would they make you bullish on particular stocks when they're laying off staff because they're reducing their costs?
Yeah, so normally it would be a bullish sign. Actually, someone asked me that on TikTok this morning. They said, like, isn't it a good thing that these companies, it's not really a good thing because people are losing their jobs. On the other hand, they're tech, so like these people gets picked up somewhere else, probably, hopefully. Usually it would be a good thing, right? Because they are cutting costs and they are saving on these salaries. But in the broader like economic time, like the times right now, where people are already worried about a recession, they're already expecting that things are going to get worse. Inflation and all of that stuff is already on people's minds. The supply chain is already on people's minds, and now these big companies are laying off massive amounts of employees. It's less bullish short term, but personally for me, it is bullish. Like I'll go in and I'll buy some stock when they get hammered. So it's like a reverse bullish. You know what I mean? Like I'm not expecting the stock to surge, but I'm optimistic. Like I see this as a buying opportunity. Does that make sense? Like I'm trying to like phrase how I'm personally.
I think what it comes down to is I feel like from what I'm hearing is you feel like eventually these are going to return to the highs that they were at and probably make new highs over time because you have a broader outlook. So, you're just looking for, yeah. Now, do you layer your capital when you go into something like that? When you see that and you're like, okay, recession is looming, so to speak, everyone's talking about it, and maybe we do get it, so I should have money on the side. Do you, when you average into a stock that you like, do you weight them, I guess, to the downside? So like the lower it goes, the bigger your position size gets. Is that something you do?
Oh yeah. Yeah. So it really depends on the company and how many shares I already own and how many shares I'd like to continue to buy. So if I want to buy like 100 shares of a company, and we're in a really strong economy and a really good bull market, I'll probably just buy the whole position right there, like lump sum, just get it all because I believe it's going to continue to go up. If we're heading in the opposite direction, like a bear market and a recession, I'll typically buy like 25 shares at a time, or maybe I'll buy, if it drops further, I'll buy 30 shares or 40 shares at a time. And I'll be looking at the charts as well to see where we are in case the stock starts to consolidate after a big sell-off. I'm sorry, I'm reading the chat as well. So I'll look for a stock to consolidate or get oversold. And then I'll consider buying even more shares until I hit my target. Once I get my 100 shares, then I'll back off.
So that's what I just gathered. Instead of like a capital allocation, you allocate based on shares. Is that because you're usually targeting dividend returning, dividend returns? You're looking at all that to see, does the dividend make sense compared to maybe something else in this sector I might be interested in? And you go that route, or do you specifically only look at the company and go, okay, I don't care what its competitors are doing. I like this company in particular. I'm going to layer into this. And it happens to be in a sector that I'm interested in being in at this time.
Yeah. So typically what I'll do is I'll buy in blocks of shares for dividend stocks. And if it's a growth stock or something like that, I'll just pick up shares as I can as it drops a little heavier.
I think I saw this is probably a couple weeks ago, but I feel like I saw a TikTok that showed you were buying McDonald's. Was that correct?
No.
I feel like you made a TikTok on it, and I was like, is he buying McDonald's right now?
No, I did make a TikTok about McDonald's, but it was more of a skit than
okay. That's what I was wondering, because sometimes I'm like, all right, you've got funny stuff, and I'm like, all right, so which one is it? Is he buying it or not? But I know that you compare those things. So you were talking about like Costco, Dollar General. I imagine if you were interested in those, you've probably already started accumulating some of those just to kind of hold. Is there anything besides? I know you said you're kind of shying away from growth stocks right now in terms of tech because a little bit higher volatility. Is there anything in 2023 that you're like, all right, this is the sector besides, like Dollar General, Costco, things like that? Is there anything that you're like still researching that you might be interested in, but you're not sure yet? I'm curious because I'd love to pull up a chart on it and just kind of look at it myself, even off stream.
Yeah. Geez. Off the top of my head, I can't really. I mean, I'd like to buy some more Rivian stock. But actually, I'd like to start a position. I don't own any Rivian stock. But off the top of my head, no, I really can't think of anything that I want to buy, but I haven't yet.
She said Rivian?
Yeah.
Is it because you saw one of their trucks? I saw one recently, and they're really cool.
They're all over DC. I've seen
one in Kansas, and I saw it, and I didn't know what it was. And it was behind me with the lights on. And I was like, what the hell is that? So I slowed down so it could go past me. And I was like, that is a cool truck. And I saw the back. I got the logo, and I was like, okay. Very, very cool.
They're weird looking, but they're weird looking. I mean, I don't personally like the headlights in the front, but they're weird enough that like people stop and they go, what is that?
I did. I slowed down.
Yeah.
And I speed everywhere. You know, like
apparently Rivian trucks are like super fast too. They have like 0 to 60 in like a couple of seconds. They're pretty fast.
that is wild.
But
What's
Rivian,
got you attracted to that sector? Is it just because there's not like a huge EV truck market, or like what has you attracted to Rivian? I guess I should ask.
so Ford owns like 17%. I mean, Amazon owns they have a 17% stake in Rivian. I have a feeling that Ford is going to want them to make like an electric delivery truck or something like that. Ford owns, I think, 9% of Rivian stock. So they've invested, they've put a lot of money into this company. Their growth too is nuts. Like if you look at the revenue, they just went public like 2 years ago. They just went public, so they don't have a lot of earnings that you can look at. But their quarterly growth is insane. Like last September, their revenue was $1 million, and this September it's 536 million. So like in a year, they've made like $535 million, and they're a very small. They sell like 6,000 cars or trucks per quarter, so they're tiny, but they're growing, and I like it for the like explosive growth, and also
I like that.
Since they're
I like that they're partnered with larger blue chip companies too, like Ford and Amazon. These companies aren't going anywhere, so that definitely helps. Kind of reminds me of, so when you're talking about Ford partnering with them, and Ford is all over the truck market. Obviously, they are the #1 producer of trucks when it comes to like fleet trucks, anything. The F-150 is just out there, but I used to work for Volkswagen, believe it or not, and Volkswagen is one of the world leaders in EV in terms of like actually putting money into that market, trying to be a leader. And I remember trading their stock actually back in 2021 and calling that pump that it had to like 40, I want to say like $47, and it was down in like the 20s when I caught it. And I knew that because I used to work there, and I was like, hey, I know what they're doing. They invested like $4 billion, and they partnered with Ford because Ford wanted to use their factories in Europe to produce an electric truck, and they didn't have the infrastructure. And Volkswagen's huge worldwide. In America, they're not quite as big, but worldwide, they have a pretty big, grasp on the market. So I saw that happening. I don't know if that deal ever went through, if they're still continuing to work together or not, but they were definitely in talks of like teaming up essentially because Ford wanted an electric truck and they wanted to go to Europe with it. And they didn't have the factories there. So I'm curious how that went, but it's not surprising to see them try to go in and get a position on someone like Rivian, knowing that they were thinking about this back in 2017 and 16. It's not like this hasn't been something they've been working on. So it's not like it's been a something that just popped up out of nowhere. I do want to say that to people, like this is a company that has been trying to do this for a while. And I think personally, I do look at Ford just from a fundamental standpoint. I do think that what they're doing with EVs, and they are trying to challenge Tesla a little bit, it's going to be good for them. I think they have the production to do it. So I do like that. Rivian will be one that I check out. Maybe I'll make a TA video on it, and then you can make a video and we'll collab, and you'll do, well, this is what their balance sheet says. So your TA means nothing. This is why I invested. We do have another a question here from Pullman, which I think is a good question. About the recession. If everyone knows we're heading into recession, isn't it more likely that we'll avoid it since companies are making changes to avoid it or lessen it for themselves? It's tough with that one, but I'll let you kind of give your thoughts.
Yeah, I totally agree. So like, one of the ways that you cool inflation is like to raise the interest rates. And what I've read and what I've seen from a lot of economists, I'm not an economist, I just trade stocks in my pajamas, but what I've seen from a lot of economists are the way you cool spending is either you skyrocket interest rates or you threaten higher interest rates coming to kind of like scare people into cutting back, and that slows. Like basically it's a supply and demand. Like a lot of people are getting jobs. Forget Amazon and Microsoft laying off people, but the job numbers are pretty good every month. So the employment is at like record lows. Lots of people are working, which is usually good, except that we have these supply chain issues, we have inflation, and now we have people going and buying more stuff because more people are employed. The way you bring down the spending is either you skyrocket the rates. I mean, they're 5%, right? But like in the 80s, they were like 17% interest rates. We're like a lot higher than they are now. So this is really kind of nothing. And you could also, the other approach is to scare people into cutting back. Right? So you say it's coming, it's coming, it's coming. So what do people do? They spend less, they hold on to more money, maybe they drive less, They do everything they can to conserve whatever they can. Maybe they start their rainy day fund. So you kind of talk about it so much that it scares people into spending a little bit less, and that kind of sidesteps the recession, kind of sidesteps a market crash, because people are kind of preparing for it. So yes, I think Poolman is totally spot on.
I think the only thing anyone's worried about is if the Fed decides to keep their foot on the gas and send us there. And I know that's what everybody's kind of worried about is, what's the Fed going to do? Because I think now we're at a point where the statements that are being put out, like I follow, market news on Twitter, obviously, and specifically I have it flagged to show me when a Fed chairman makes a statement, because it's up until here recently, it was really, really good to keep following that because they were telling you exactly what they were going to do. Rarely do they actually do it in the past, over the past since like 2016, they've been like, oh, well, we're going to bring rates up a little bit. And then they just kept lowering them to zero, basically, even though they had scheduled rate hikes, right? But now they've been artificially for so low, it got to the point where, okay, they're no longer bluffing. They're going to do 75 basis points till we get to 5%. We're pretty much there. Do you think they'll overstep? Because that's usually where something like this breaks. Because that's the economy is a really big portion of that, in the sense that the labor market, right? You were just talking about it's still strong. And if they keep stepping on it and the labor market does soften, and then when we start tumbling, that labor market's not there to kind of prop us up. Do you think that's something that if we were to see something like a mini recession or even a full on one, that's how it would go down? Or, what are your thoughts if we do go into a recession? How do we get there?
You mean could the recession be caused by the Fed going over 5%?
Yeah, and then holding it there, but also still continuing to take money out of the economy. Because, just because you raise rates, there's several things they're going to do. They're going to, I think it's, what do they call it? Liquidate their balance sheet. If they continue to pull liquidity out of the market, is that going to be a problem long term? And do you think this is something that maybe we're just not giving enough time to grasp? Because for me, I look at it as I don't think we're going to truly know until the second or third quarter of this year if we're going to see those lower valuations, and we may not. So I'm kind of in your bucket where I started averaging into Bitcoin, because we trade crypto at 16.6, but I still hold those shorts from last April up in the 40,000 range. So I've kind of started hedging my bets just in case. So that way, if I am, wrong about this potentially being a low, I can still continue to hold those shorts from higher. I did make some money on this position. I have taken some profits because it'd be stupid not to on a 30+% move. But, what are your thoughts there? Do you think it comes later in the year before we get clarity, or do you think that, we don't need to wait that long, I guess?
Well, we have a Fed. The Fed is speaking again on February 1st. So we'll get some more insights then as to what they want to do, if they want to be more aggressive with the rate hikes, or if they're going to kind of taper and cut back. If they taper and cut back, it could be a strong signal that things maybe have turned a corner. But, I think what we really need to see is that inflation continue to drop. And that's going to be what I'm looking at.
I need to fact check this, but I saw someone had posted, and it was a reputable source on Twitter. Somebody had posted that they're changing the way that they measure inflation this next year for CPI. And I thought that was very interesting. They're not going back as far. They'll be eliminating data from the prior year potentially. And I was like, that would make sense if you were trying to, get an average that was more suitable to whatever headline you were trying to push. But I don't know if that's true. I didn't fact check it. So I was wondering if you'd heard anything about changes they were making or no.
No, I haven't either. But didn't they also do that for the recession? Last year, it was two negative quarters of GDP signals a recession, and then they changed it somehow to say
I chalked that whole thing up to midterms. I was like, this is a political move.
Yeah.
They're trying not to screw over the Democrats going into election by, saying, hey, we're in a recession, because we all know that would probably tank the election for them. No one's going to vote that direction if you were in power when that happened, So regardless of your performance in office, it is what it is.
It wouldn't surprise me if now I can't remember what it was, but the historical definition of a recession is 2 negative quarters. And then they came out and they were like, well, we have 2 negative quarters, but we also have really strong jobs, so we're not in a recession. I think maybe that was it. So it's not a surprise that they would be changing stuff to suit their narrative.
That's fair. One thing I haven't gotten from Max is really any questions on his end. So I do want to ask. He's got to have something floating around in that big head of hair over there. It's where all the ideas are. He's the only one on the podcast with a great head of hair. And
Well, firstly, I want to say thank you for putting up them playlists for me on the recession after our last interview. Appreciate that a lot. The questions that I've got are something to do. Yeah, I've tried to relate it to the title somewhat. So you said that it was $250 a month if you're in your 20s to invest in. I would say, what would it be for if you're in your 30s? Because I know there's some older people in the group. What would it be for just to invest in regular stocks? But the other one, which kind of goes into it, would be, would you just invest in an index fund if they kind of wanted to be in other things, or would you handpick selected stocks, whether it be TA or fundamentally based? Like, which one would you pick, handpicked or index fund?
Yeah, I would do. Sorry, I'm looking on my calculator right now to pull up how much you would need every month. I personally think for most people they should just go in like a broad market index fund, like an S&P 500 index fund, and because I think what ends up happening is like people come to the stock market or to crypto or investing because of something like Dogecoin, AMC, GameStop, and they get really excited about it and they throw all their money into something speculative. They end up getting crushed and they go, this isn't for me, and they walk away. And I think most people should just have like a baseline, like a solid foundation in an index fund and a high-paying dividend fund like SCHD. It's Schwab's High Dividend Fund, and that's your solid foundation. That way, if you lose interest or you get bored or you go, whatever, and you forget, like you can keep investing every month into these funds, and just at the bare minimum have, depending on your age, $1 million when you turn 60, obviously not factoring in like inflation and stuff like that. But still, like $1 million is still $1 million when you're in your 60s, even if it's worth 700,000 or whatever. It's still more than you had, and that's like the solid baseline. Once you get that established, then if you decide like, hey, I really like this and investing is cool and this is fun, then you can branch out and look at individual stocks or sector specific ETFs like growth, real estate, and stuff like that. But I personally am like a hybrid mix where I have a lot in my index funds and I have a lot in growth stocks, but that's just because it's what I'm comfortable doing.
I was going to say handpicking stocks is actually not easy. And I do I've emphasized that before because, look at Jim Cramer, for instance. Everyone gives this guy some pretty heavy shit, and deservedly so. He misses a lot, but it's also not easy to go in and look at one individual asset and, just on a fly and be like, all right, this is my long-term projection. It's one of those things where it is tough. Handpicking stocks can be risky. That's why things like the S&P 500, like he was just talking about, and other indexes are good investments because it gives you that, broad exposure to lots of different assets. So I do agree with that. I do think that, blue chips are worth it for sure. If you can get in at a good price, obviously, and you're not getting in at the top of like a bubble like Amazon or Facebook, or I guess Meta, whatever they're calling themselves these days. I'm still not used to that, but that's
let's see. The thing is, like, if you're trying to pick the next big winner, then it's really tricky. Like, in the early 2000s, you couldn't have looked at Apple and been like, this one is gonna like just kill it. You couldn't. Maybe you bought it. Like I bought it in 2003, but I didn't know it was gonna end up doing what it did. That's a lot of work to go through a lot of growth companies, a lot of tech companies, and really like pick the one that you think. That's more of a gamble to me, and that is super risky. But on the other hand, there are like good individual stocks like Johnson & Johnson, Procter & Gamble, Merck. I don't know, some people might not feel comfortable investing in big tobacco, but like Altria has a solid dividend, stuff like that. Those really large cap companies, they're pretty easy to invest in. It gets tricky when you're trying to pick what's going to be the next Apple, what's going to be the next Tesla, what's going to be the next whatever.
You know what I find when people try to do that too, and this is something that is like rampant in cryptocurrency, is they fall in love with the company because they did all this research. We have this inability as humans to know that we can be incorrect. We refuse to think that we aren't doing the right thing. We think that we're always right, unfortunately. And you fall into this almost like maximalist view of like, okay, I've made the best investment. There's no way it can go down. And if it tanks, they continue to hold because they're like, nope, I've got these delusions of grandeur. I'm going to, you know, they want to hit a home run, I guess, instead of, you know, diversifying like you just indicated. So it's a really good point because he just listed several companies. And even though it seems like they're handpicked, I imagine, you know, you're spread out over them. So if one doesn't perform the way it's supposed to, you know, you've got other ones that will.
And you know, like what we were talking about earlier with Rivian and stuff like that, like I view those more as speculative investments. Like maybe it will, maybe it won't. I don't know. Ford is in it, Amazon is in it. Those are good signs, but it's not a guarantee that Rivian is going to be the next stock that goes up 1,000% or whatever. So the other thing that's important is like when I talk about stocks, like, oh, I bought a little of this or I bought a little of that. I mean it. Like when I say I bought a little, it's a really small position in comparison to stuff like my index fund, like Apple, like my like Altria, like the boring, like Verizon, you know, like companies that are going to be around. People are always going to use them. They might not have explosive growth, but they're good, especially in recessions, because you know they have that proven track record. They have the assets to keep the dividend going. It's a product that people are always going to need. Like I'm always going to have a cell phone bill. Those I go heavier into those. So, you know, when I talk about like, oh, I bought some Snapchat or whatever, if it goes to zero, I don't care. Like it's a very small part of my portfolio.
I always try to tell people that don't understand risk management in the cryptocurrency space a lot. But then they'll say things like, well, if the, you know, banking sector just puts 1% of their funds into this sector, then the sector would go boom. And I'm like, why aren't you doing that? Why aren't you investing that way, in the sense that why do you have all of your money in cryptocurrency? And why aren't you divvying that up and saying, maybe I should only have a little bit of my money long-term invested in this and then put the rest in safe investments, and play the long game? Because ultimately, if you want to, you know, retire at a decent age and have capital when you retire, you have to play the long game, because otherwise it's a boom or bust thing. And you'll keep playing the game because I think people get addicted to the feeling of like winning big, of course. And it's easy to do when the market's going straight up, especially in crypto, obviously these little cycles it has. But as soon as the music stops, it's like a lot of that stuff goes to damn near zero. And sometimes they give everything back that they made. So, you know, kind of like Kenneth was just saying with Snapchat, you know, if Bitcoin goes to zero, well, I would be very upset because I hold a lot of Bitcoin and I'm short on Bitcoin. So I'd make a bunch of money, but if no one's there to buy it, it doesn't matter. I'd like to think I'd be smart enough to get out before that happens, but we'll see. The idea of something going to zero is really kind of an unfathomable thing for a lot of people, but it can happen. Companies do go belly up. AOL, things like that, you know. I don't know if AOL was publicly traded back in the day or not. I don't think it was. Was it?
Yeah,
I can't remember if they IPO'd or not. I was too young to invest any. Well, I guess there's no such thing as too young, but I was 12. So yeah, definitely not old enough to buy any, but it's just one of those things where you guys have to remember that. So when I say things like, you know, in crypto, we call things shit coins. I guess that's like saying they're penny stocks, you know, in your world. I always tell people like, dude, don't put all your eggs in that basket, because you have to have safer plays. And if Bitcoin's the safer play and everybody says it's boring and Ethereum is boring, I'm like, you know, it's the Apple. You know, it's the Apple for our market right now. You know, if you believe that's going to be a different asset like Algorand or something in the future, buy a little bit of it now. Don't just put all your money in it. Buy some of these other things, and you can shift over time. You can make changes. You know, that's the important part of it. So that's a really big aspect that I think is missing in our space specifically. Like, I think your audience gets your content because you do a lot of stock stuff. But if there's one thing I would say would get you a ton of views in the crypto market because it's booming, is doing that with crypto. No one wants to hear it, but you will get plenty of interaction. You might get some haters though. So careful which coins you pick. Maybe avoid the XRP army, things like that. But, you know, going over and be like, all right, I'm interested in crypto. Here's how I invested. This is the percentage of my capital I allotted to it because I just wanted that volatility exposure. If something happens to it, I'm still going to be able to continue investing for a living and live comfortably, you know? Yeah. And I think most people don't realize what a relaxing feeling that can be if you just do the things that aren't popular from the beginning and the outlook, you know, long term. That's kind of how I look at it at this point. I want to retire by the time I'm 40 and I'm 34, you know, I'm close to my goal, to be honest with you. So it's one of those things where it wasn't an easy goal to reach. And it's really hard to stay on track when every day you're looking at the market and you're thinking, how can I make money today? Or if I'm trading, you have to have some discipline. Discipline is really going to be the big driving factor for most people. Just like in trading, where you can't be out of risk, betting too much or gambling too much, I should say, with leverage. Investing is the same way to me. It's discipline. It takes time. No one just invests for a year and becomes, Warren Buffett or gets to retire. It's something that you do over time, and then it does accumulate. It's like going to the gym every day. Over time, things get easier. It gets better.
That's exactly how it is. And people, going back to the crypto thing, like, and even with like the stocks like AMC, but like Dogecoin, Shiba Inu, and all of those like high risk things that got a lot of hype online. People rushed in because they thought they were going to get super rich, and then they got wrecked, and then they lost a lot of money, and they're discouraged now. Like, they walked away from this going, this isn't for me, which is why, like what Max and I were just talking about, like, start the baseline with the boring stuff. Or even if you get like pulled in because of AMC or Dogecoin or something that's like really exciting, if you make money on those, put it in the boring thing, right? Like, put it in the dividend, put it in the like really stable stock or a Bitcoin or something like that you really believe in for the long term, that's safer, that's boring. Because like you were just saying, like, the odds are you're gonna get wrecked going forward, and you're gonna make it, and then you're gonna lose it all, and then you're gonna walk away discouraged, like, investing isn't for me.
I agree. Matt's got a really interesting question. It's kind of a weird one, so I almost avoided it, but we'll go ahead and bring it up. It's got population decline in there, so that was kind of the thing. But if we start to get the population decline, would you still use the strategy of investing into broad market index funds, or would you shift over to dividend kings? I didn't know we were on a population decline. I thought we were over 8 billion people in this world, but that's an interesting question.
I just saw a headline about China having like their population was on the decline for the first time ever, or maybe not ever, but like in a very long time. That doesn't really concern me. It's like when they say like, like Tesla just had their earnings out, and the analyst expectation is that they were going to deliver something like 430,000 cars for that quarter, and they delivered 400,000 cars for the quarter. 400,000 is like an all-time record for them, but the stock dumped because they didn't hit that analyst expectation of 430. It was still a record, like to what you were just saying. Like, we have 8 billion people, like, so if the population declines a little bit, it doesn't really matter. Like, we still have billions and billions of people. I'm not particularly concerned. Actually, I think it'd be a benefit for the planet to have less people, less waste, less trash, less
Kenneth's got his nihilistic view. I like it. I'm not a Go ahead, Max.
It'd be a benefit. Cut them off.
Yeah, cut them off. Oh man, I'm not a big proponent of people that just are out here having kids to have them. The only reason is I have children, and I can tell you right now, it's a lot of work, it's a lot of responsibility, and it's a lot of time and money. Like, resources that right now might be a little more scarce. So I wish people maybe planned a little bit better. I think it would benefit everyone. But he says Italy's a great example. I knew Italy's population was declining. I didn't know like all of Western Europe is, though. I knew some places were having some issues. I want to say not France. Oh, I'll think of it. But I've never thought about that. To me, I look at it as, will the population decline enough to really matter in the markets? Are we really running that short on people? It's,
if anything, it might be an overall shift in economies and spending and stuff like that. But Wall Street will always find a way to win. Like, so they'll sell fewer Teslas and they'll sell fewer whatever, and we'll readjust. Like, we'll just have smaller price targets potentially in the future, if this is really something to be concerned about. But
poop in the blender, heck of a name there, sir. Schools are already consolidating. These kids will lead to smaller homebuyer population in 10-ish years. That's a really good outlook. I guess if the population is declining, you would think that real estate might become not less desire, but less in demand. But I don't know. There's companies that are buying it because they want to rent to people now. It seems like, that part of it. I feel like real estate will continue up. I do think that, it does need to come down a little bit still, even in my area. Like the housing valuations are absolutely insane. I live in Kansas, you live in DC, so the markets are completely different. But just to put things in perspective, I bought some units back in 2017, call it right between 125 and 130,000 a piece. They're 3-bedroom, 2.5 bath. They're all identical. They have a 2-car garage, 1,600, 1,700 square feet, yard in here. You're looking at me like that's an insane price. Like, how did you buy that? But now they're valued at like 200,000 each. And I'm like, that's so much money for this, is how I look at it. Cause that just a few years ago was half this cost. And I would never imagine wanting to buy a townhome for 200 grand, at least not here, but where you're at, I'm sure you can't touch anything for 200 grand, to be honest. Like if you're in DC, I don't know what the housing market's like there, but I bet it's pretty insane.
I paid $315 for my 600 square foot apartment.
Oh my God. You did?
Yeah.
When did you buy that?
5 years ago.
5 years ago? I know you were looking at a place out in like California at one point, I think.
West Virginia.
West Virginia. Okay. It was like a cabin, wasn't it?
Yeah.
That was a cool little spot. Kind of fell through because you said it had an inspection issue, but like, yeah, I was rooting for you to get that one because I was like, I'm going to send Kenneth a hat to wear when he mows his yard. It's going to be great. But no, that's a really good point, Mr. Blender. I'm not going to say the full name, but that's an interesting name. Are there any other questions for Kenneth? We've been going about 45 minutes. I do want to have him on again, and maybe we pick a specific stock like Rivian and let you just hammer through the financial statements and kind of tell us each, section, like, okay, I'm interested in Rivian. This isn't financial advice, but these are the things that are positive about it and I really like. And this is what I'm showing where I found the information. It's a step-by-step. I'm sure there's a video like it on your YouTube, but we're going to put as much information like this into the internet as we can. And that way people can go to these sources and say, okay, I don't need to put in a comment in Kenneth's video and say, hey, will you look at this stock for me? I can now go and start evaluating it myself. And you guys can write those things down and maybe even at that point, post it, be like, hey, I looked at this stock. It's showing me these earnings. Like, based on what you've told me, is this what I'm looking for? Are these good metrics, bad metrics? What you do with your money after that's up to you, of course. But it's one of those things where it definitely doesn't hurt to get more educated on like a balance sheet. And Max is asking behind the scenes if we're going to talk about crypto companies behind alts. I touched on that at the beginning before we went live. So one thing I was looking to do, guys, so if you guys can find this information, let me know, because I would love to have Kenneth on again. I looked yesterday and again this morning. I spent a couple hours looking for it on Google and all kinds of places, looking at the companies that are backing some of these altcoin projects, because obviously Bitcoin doesn't have any company behind it, but looking to see if they publish their financial statements, which is tough because, they sell their tokens and stuff, and that's the asset, right? Would love to see what their revenue is like, what their debt is like, and let Kenneth kind of go, okay, yeah, this is a really speculative asset, but it's got good debt ratio. What it may be, it might be actually be something I'd be interested in allocating a small position to, based on only that, not even looking at what they do, just looking at their verified, financial statements, which would be great. I just don't know that that's available, which is hard. That's a really tough one. It has the Fed. Maybe. Yeah, she goes, it has the Fed. Maybe. The Fed is not the Fed, but the DOJ is talking about cracking down on crypto, and maybe that becomes more regular where they have to produce these things, which would be ideal. That is my last question, I guess, before we go. Do you have any thoughts on the coming regulation for crypto? I asked this to Alex Demonic Crypto, as we knew him back in the day, the other day. And I was like, what do you think about regulation coming? And his take on it, which I thought was interesting, was we already have regulation. They just don't have a way of enforcing it properly. And now that they're figuring out how to enforce it, all these companies are going, wait, what? These were the rules the whole time? He goes, and they were known rules, like securities rules. Like, it doesn't change just because you come into crypto, is what he's saying. Or do you think that they're going to come out with like their own classification for it altogether? Maybe a different asset class with different rules to play by?
I kind of always imagined it would be its own asset class with its own rules. But I don't know. I can see what Alex is saying. about it already existing. And so, like, what is he saying? Like, will the stock rules just apply to the crypto as well?
Yeah, specifically, like his take on it was NFTs, but this also applies to like some of the other things, like where, hey, these are unregistered securities that you guys are marketing because you're promising a dividend if you buy into not a dividend, but a return. If you buy into this digital currency or cryptocurrency, you're going to see a higher valuation because our company is going to do X, Y, and Z. That's the argument against Ripple. Obviously, that's the biggest, most notable one. We'll see how that one shakes out because it'll probably have some reverberations for every other asset in the class. And Gary Gensler is on record as saying that he thinks every crypto outside of Bitcoin is an unregistered security. He's flip-flopped on Ethereum a couple times. I'm not sure what his current stance is, but he's on record saying he thinks it's security. And then another time, I think he said it wasn't. So I don't know what's going on with that one. But if that happens, I don't even know what the ramifications really are. If these are unregistered securities, are you just going to pay a fine? Like, do you have any, knowledge on that with your experience, or you're just like, nope, we're just kind of wading through it? I guess cryptos kind of just came out of nowhere, didn't they? And
then, I have no idea. I think they have no idea. And all this regulation stuff, these guys, like, they don't even, the people who are making the changes and making the laws don't really even understand it. So I think regulation is a long time coming. I mean, a long way away.
You think they'll need a committee to do that then, like a special committee that knows what's going on,
knows all about this stuff, and really is educated on crypto? And it could take, how stuff happens in DC. It could take years, I think.
We'll just measure things, I think, in Bitcoin cycles. So it could take another couple Bitcoin cycles before they actually have their shit together, knowing our government. And then Matt, what about Bitslotto? I don't know if he saw that. The Department of Justice busted an exchange called Bitslotto. I guess it was a Russian mob bought the exchange, and I don't know if they were like washing money through it or what they were doing, but they shut it down. They put out this huge statement yesterday, really ruffled the feathers of everyone, that they were coming out with a cryptocurrency enforcement on an international cryptocurrency exchange, and everyone's like, Binance is getting busted. And then Bitslotto comes out, and we're all like, what the hell is Bitslotto? My response was, if you have to ask, you can't afford it. So it was a nothing burger. But yeah, it was just, it's the equivalent to that meme where they're like, we got him, and it's a guy holding like a little bag of weed and like $5. That's what the equivalent this was in crypto. So when they came out, I was like, oh, this is unfortunate. But yeah, it got everybody kind of right when the news broke that they were going to make an announcement, the market dumped, and everyone started attributing the market dump to that. But I attributed it to the S&P 500. SPX was dumping. And I'm like, Bitcoin's just following traditional markets at this point. That's what's going on. So
he faces a maximum penalty of 5 years in prison. It sounds worth it to me for the amount of money he's taken. Jesus.
If he gets to keep it, it's on the blockchain. If he's hid some of it, like there's reports of guys out there doing that early on. What they would do is they'd take all the money they made from illegal activities, they would buy Bitcoin, they would remember their seed phrase, they would smash everything, and then when they got out of jail, they'd have the seed phrase and they'd go recover the wallet, and then they'd have all the money, So that was kind of the theory behind it. And so I'm like, maybe they do some of that. I don't know, but yeah, Dixie was pumping. The DXY is that support. We'll get into that another time. Kenneth, I want to say thank you again for coming on. I love having you on because you're such an easy conversation and you have really good insights and like practical advice to people, things that people can start doing like today. And what I mean by that as well is if you guys are like, okay, I'd like to get started, Kenneth's information is down below. As Max said earlier, he uploaded a recession playlist to go over like how to get involved in, like, I'm sure, value stocks. He's also got plenty of other playlists about getting started in investing. So everything you need, A to Z, is there. The only thing stopping you is probably yourself and actually doing it. And as Kenneth alluded to earlier, you don't want to wait till you're older to do this. If you do, it's just harder and it's discouraging when you look at it probably. But if you do it when you're younger and you just stick to it, it's like brushing your teeth every day. You know what? You'll have nice teeth when you get older and you'll have a lot of money. And who doesn't love that? And
what was the figure for 30-year-olds? Did you work it out?
What's that?
What was the figure to invest for 30-year-olds? Did you work it out?
Oh, yeah, I have videos on, it's like in the, let's see. You would need, it's like over $550 a month. Which, like,
550 to become a millionaire by the time you're 60, yeah?
Yeah, if you're 30. If you're 30, it would be 550 a month, and it's almost 1.4 million that you would have. The same is like 250 bucks if you're in your 20s or less, depending on how early you start.
That's the
but like the
that's the
older you
average car payment, isn't it?
what's that?
At the average car payment right now, like 550, isn't it? Like there's somewhere in that ballpark. The average car payment for a person's like 550 a month. So to put things in perspective, guys, you would have to be able to afford a whole nother new car a month.
The thing is, like when you start in your 20s at $200 or $300 a month, it's that same number when you're in your 40s and 50s, 200 a month, 200 a month, because you've already built that big foundation when you were younger. When you're in your 30s or 40s, it's $700 a month, $800 a month. You don't have that. Like most people don't have that. They have kids, they have mortgage, they have rent, car payments. And then, oh, by the way, if you want to have $1 million, you need to put in $700 a month because you waited. Nobody has that, so nobody can retire.
And who knows what you can actually retire with in the future? We don't have a crystal ball. In 20 years, that figure does have to be greater. And if you're not growing the capital with the market, you still are going to be at that position of, okay, can I actually do this? Because I don't know the future of Social Security and nobody else does. And that's not to scare anyone. It's just these are practical things that, unfortunately, once you become an adult, you have to think about. I know I got my first lesson in it. I took a personal finance course in college, and I started working at UPS. And I was telling my teacher, I was like, yeah, they do. I think it was a 5% match on 401k, plus you got a pension. And he was like, put as much money into that as you can. And so when I was in college, that was one of my jobs. And all I did was I'm going to max out the 401k for the match. And every job I ever had after that, up until, I stopped working, that's all I did for about 12 years. Now that's not comparable to someone who's been doing that for, 20, 30 years. But, to put things in perspective, I was making six figures for 5-6 years. So it was one of those things where I was putting a lot of money in there. There were months where I'd put more in there and you just leave it alone. Now, you let it grow. I'd love to contribute more to it. I don't anymore, but maybe I start in the future again, just find one and continue to, because it's nice to have that exposure. But if you guys have those options at your jobs, like look at them and take advantage of the free money they're giving you, and understand it's a long-term thing. You can't put the money in there if you need it today, but you're going to need that money tomorrow. And you should live below your means so that you can afford to do these things, because in the future, you'll thank yourself. You'll get to the age of 60 and you'll actually have that safety net. And you'll be like, hey, when I retire, I can actually do things. I can go places. I can relax, maybe eat more burgers, Kenneth. I know that's your thing. But yeah. All right, guys, approaching an hour. I am going to cut it off here just because we'll keep these somewhat relatively short. But thank you again, Kenneth. If you guys aren't following him, information is down below, and we'll see you guys in the next one.